This is where we cut through all the noise, we distill the data, and we really try to deliver the insights you need to understand the fundamental shifts happening in the markets.
Or, to just satisfy that relentless curiosity. We're so glad you're here with us.
We really are. Thank you so much for joining us for what is going to be a crucial deep dive. If you appreciate the work we're doing, please, right now, just take a second, hit that like button.
Yeah, and share this with a friend who needs the facts and needs them fast. And of course, subscribe and stay tuned for more content.
It really does help.
It absolutely does. Our mission here is always to make complexity comprehensible. And today we are diving into a transcript that is just packed, not just with complexity, but with some, truly staggering figures.
And some pretty bombastic, high-stakes claims to go along with them.
No, for sure.
Okay, so let's unpack this. Our source material today is the Q3 2025 earnings call transcript for Palantir Technologies, ticker PLTR.
Right, and the management team, you've got Alex Karp, Shum Sankar, the whole crew. They were using language that just went so far beyond typical corporate talk.
Absolutely. Words like monumental, shattering expectations, unprecedented. They were just tossing them around.
What's fascinating here, though, is that the rhetoric, it wasn't just fluff. The actual core financial results seem to back up these pretty extraordinary claims.
That's the key. So our deep dive mission today is to give you that shortcut. We want you to understand not just the raw financial data, but the strategic commentary, the competitive positioning.
And what Palantir's management genuinely believes these results mean for the entire enterprise AI industry. We're looking for those aha moments in their internal story.
And maybe, even push back a little on the audacity of some of what they're saying.
Exactly. This is our roadmap to understanding why a single quarter is being framed, not just as a financial win, but as like a philosophical validation of their very unique and often controversial approach to tech and culture.
So let's start where they did. Section 1, the prepared presentation and those monumental financial and commercial highlights that really set the stage for the whole call. All right, so starting with those headline numbers, Ryan Taylor kicked things off in the prepared remarks, and he immediately called it a monumental third quarter.
And, when you look at that top line, it's pretty hard to argue with him.
It really is. Revenue came in at $1.181 billion.
Which is a staggering growth rate. 63% year over year, that's phenomenal on its own.
And 18% just quarter over quarter. They blew past their guidance, showing just, incredible momentum.
But analyzing that performance, the growth is really only half the story. The efficiency, I think, is what makes this quarter a true outlier.
Tell us about that.
Well, Palantir achieved a record-adjusted operating margin of 51%.
51%.
51. So what that means is that out of every single dollar of revenue, 51 cents translated directly into adjusted operating income. That's $601 million.
That combination of, that kind of speed and that kind of profitability is just incredibly rare, especially in a software company that's trying to scale.
Which brings us right to the Rule of 40. This was the metric the management team just leaned on again and again.
Right, to reinforce their claim of being the, and I'm quoting here, defining enterprise software company. And this is where it gets really interesting.
It does.
The Rule of 40 score hit an unprecedented 114.
If we connect this to the bigger picture, hitting 114 really needs some context. For anyone listening who might not track this metric every day, the Rule of 40 is a key health check for software companies.
Pretty simple, right?
Super simple. You just add the company's revenue growth rate, so in this case, 63% to its profit margin, which was that 51% adjusted operating margin.
And a score of 40 is considered healthy. That means you have a stable, well-managed company.
Exactly. So if 40 is healthy,
then 114 is just absolutely astounding. It puts them in a league almost entirely by themselves, especially the scale they're operating at now. This is a multi-billion-dollar run rate.
Precisely. And Dave Glazer, the CFO, he noted that this score was up a massive 46 percentage points year over year.
Wow.
And a full 20 percentage points higher than just the previous quarter. So this isn't just steady improvement. This is velocity, pure velocity, combined with exceptional profitability.
So what does that suggest to you?
It suggests two things. First, that their tech stack has hit a point of just extreme scalability. And second, The revenue they're bringing in is very high quality, high margin revenue. It's not being bought through, expensive sales and marketing efforts.
It suggests the technology itself is doing the heavy lifting, not just their headcount.
Exactly.
And that extreme efficiency is clearly being driven by what they kept calling the U.S. velocity story.
Right. That geographical pivot seems to be complete now. The U.S. business accounts for, what, 3/4 of their Q3 revenue?
3/4. And it's growing at 77% year over year and 20% sequentially. The U.S. isn't just the engine anymore. It's the entire rocket.
And within that U.S. growth engine, the commercial explosion, I think, is the metric to watch for future potential.
Oh, absolutely. U.S. commercial revenue surged an incredible 121% year over
And
year.
29% sequentially. This is the non-government, the pure enterprise side of the business, and it is just accelerating geometrically.
It's so important because it now represents 34% of their overall revenue. It proves that this pivot to the broader enterprise, outside of just government contracts, it's not just working.
No, it's proving to be wildly successful. It's pulling the entire company forward.
The rule here seems to be go big or go home. And you can see it when you look at the deals they closed. The sheer scale of engagement is immense.
They reported their highest total contract value, or TCV, quarter ever, $2.8 billion.
And that's up 151% year over year. I mean, TCV represents future revenue locked in under contract.
Yeah.
A jump like that just signals radical confidence from their customers.
And the deal metrics underneath that give you the critical details on that scale. They closed 204 deals worth more than $1 million.
Okay.
91 deals over $5 million, and 53 deals over $10 million.
53 deals over $10 million in a single quarter.
In one quarter. When you have more than 50 customers signing 8-figure deals like that, you're seeing a fundamental shift in how willing customers are to commit capital.
And if we focus just on that fastest growing part, the U.S. commercial business, the TCV there was $1.3 billion.
Yeah, and Taylor made a point to emphasize this. He said it was a more than 6x year-over-year growth rate on a dollar-weighted duration basis.
So the immediate implication there is just a massive acceleration, not just in the number of deals, but in the size of the initial deployment and the speed of the whole sales cycle.
Exactly. Customers are signing much bigger checks much, much faster.
Which, naturally leads us to this crucial observation they made about the shift to enterprise-wide AI.
Right. Ryan Taylor highlighted some anecdotal evidence that customers are not just kicking the tires anymore. They are moving straight to full high-commitment enterprise agreements in, shockingly short timeframes.
And that behavior, it signals a market belief that AI is no longer just a pilot project for the IT department. It's a strategic C-suite mandate now. It's an existential requirement.
Yeah, he cited a medical device manufacturer that signed an 8x annual contract value, or ACV expansion.
And this was just 5 months after their initial contract.
5 months. The conversation moved from a single use case to an AI-first enterprise vision almost immediately. They're just ripping out legacy systems and going all in.
The other example was just as telling. A leading insurance company where the CEO herself, took personal ownership of the AIP transformation.
Right. Meeting regularly with Palantir to basically reimagine the most fundamental parts of their business, like underwriting and claims processing.
And when the CEO takes personal ownership, that means the entire organization is now aligned around this one transformation. This isn't a departmental tool. It's a full reorganization.
And that distinction, moving from a single project to a full reorg under the CEO's direct control, that is what underscores their entire thesis.
Separating the AI haves and the AI have-nots. It's a binary choice now. Do you transform or do you get left behind?
And all of this confidence was, of course, reflected in the updated guidance from CFO Dave Glazer.
They're guiding Q4 revenue to $1.329 billion, which is a very aggressive 61% year-over-year growth rate.
And for the full year, they raised the 2025 revenue guidance midpoint to $4.398 billion. That represents 53% YoY growth.
Crucially, though, the U.S. commercial revenue guidance was raised to excess of $1.433 billion.
Which translates to at least 104% year-over-year growth. This is a management team placing huge explicit bets on that U.S. commercial market momentum continuing to accelerate.
And at scale.
At scale. Glazer also made sure to emphasize the financial discipline. They remain committed to continued GAAP profitability. third quarter GAAP operating income was $393 million.
And GAAP net income at $476 million.
Hmm.
So the financial bedrock is solid, which supports the claim that this massive growth is actually sustainable and profitable.
And for proof that existing customers are loving the platform and adopting AIP at speed, you just have to look at the net dollar retention rate, or NDR.
It increased significantly to 134%. That's up 600 basis points, just quarter over quarter.
And for our listeners, an NDR of 134 means that, on average, your existing customers are now spending $1.34 for every dollar they spent last year.
That expansion rate is explosive. And management explicitly attributed it to the effect of the AI revolution, which implies that once a customer starts with AIP, they just rapidly buy more.
And the total remaining deal value, their financial backlog, stood at $8.6 billion, up 91% year over year.
So, all told, Section 1 confirms that Q3 was an inflection point. It was an absolute acceleration, fueled primarily by enterprise AI adoption in the United States.
And it proves the efficiency and the scalability of their model, all wrapped up in that Rule of 40 score of 114. That number alone should be the key focus for any competitor right now.
If I were a competitor, that 114 would absolutely terrify me.
Mm.
It's proof that whatever Palantir is selling, customers are not only buying it in bulk, but are doing so profitably for the vendor.
Right.
But that high efficiency, it implies they must have solved some kind of massive scaling problem in deployment. So let's see how Shyam Sankar explains the technological breakthroughs that make these numbers even possible in Section 2.
So moving into the technology section with Shyam Sankar, the focus shifted from the what to the how.
Right, from the numbers to the actual technology, Sankar immediately established the foundation of their entire technological moat, which is the ontology.
He called ontology the elegant integration of LLM's workflow and software, something that was built over 20 years of, as he put it, grinding.
And the key point he made is that ontology is a fundamental prerequisite for getting real, safe, and actionable value out of LLMs in an enterprise setting. It's the translation layer.
Let's elaborate on that for just a moment because it's so critical. Most companies right now are just trying to bolt a large language model onto their existing messy data infrastructure.
Right.
Ontology, it acts as the sophisticated nervous system of the company. It maps the abstract language and intent from the LLM, let's call that the brain, into concrete, safe, and executable commands that are specific to that enterprise's unique operational structure.
So without that layer, the AI might hallucinate a command or, misinterpret the context.
And potentially shut down a factory or incorrectly process a huge claims payment. Ontology provides the guardrails and the context you need for high-stakes, real-world AI action.
And that existing structure, that's what allows them to accelerate their AI applications so dramatically. The first significant differentiator Sankar detailed was the AIFDE.
The AIP Native Development Agent.
Right.
This tool is designed to connect data, transform it, create ontologies, and build applications, all of which dramatically accelerates developer productivity.
And the ability of the AIFDE to create the ontologies itself must be transformative.
It really is. I mean, think about the traditional pain points of a big data migration or an enterprise software deployment. You've got defining data lineage, mapping schemas, cleansing data, integrating complex APIs.
It's all just grunt work that takes system integrators 6 months or even years to complete.
And the anecdote he used to illustrate the power of AIFDE was, I thought, truly striking because it quantified this efficiency.
Right. Sankar noted that at one customer site, 2 human FDEs, that's their forward-deployed engineers, they spawned an army of AIFDEs to migrate the customer off a legacy data warehouse.
And they did it in just 5 days.
5 days.
That 5-day claim isn't just a nice marketing line. It's a direct shot across the bow of the entire system integrator industry.
For sure. Sankar specifically claimed that an army of traditional SIs might take up to 2 years to complete the same task.
So AIFDE radically compresses that deployment and value realization cycle. The human FDE is now becoming more of an orchestra conductor than a coder managing a swarm of AI agents.
It's a fundamentally different job profile. And Sankar stressed, this is production, not a prototype. This speed is a huge reason customers are signing those massive deals we just talked about.
The idea of orchestrating a swarm of AI agents to solve hard problems, it sounds like something out of a sci-fi novel, but they're actively commercializing it.
Yeah, and then Sankar introduced AI HiveMind, which is a new AIP capability that orchestrates these dynamically generated agents for problem solving, idea generation, and even executable proposal generation.
And because it's integrated with the underlying ontology, it's contextually aware of the specific enterprise it's operating in.
The origin story of HiveMind is pretty fascinating, too. Sankar said it was originally developed for the really complex, high-stakes problems you find in the classified space.
Right, where human intervention might be too slow or just too dangerous. And now they're applying that same capability commercially to do things like identify supply chain bottlenecks and proactively develop solutions.
And in the government context, it's generating these intricate, multifaceted mission plans in their existing platforms like Gaia and Maverick.
This demonstrates a very clear strategy of taking their most advanced, battle-tested defense technology and then pushing it rapidly into the commercial sphere.
It creates a constant flow of differentiated innovation that their competitors just can't access.
That internal R&D capability, which serves their most demanding clients first, it just provides a massive constant advantage. Sankar also detailed the expansion of their scope with something called edge ontology.
This is a new lightweight implementation that runs on the far edge. So mobile devices, drones, robots.
But it remains fully integrated with the enterprise AIP instance.
And the implications of that are huge. The platform's reach extends beyond the centralized data center right into the field of operations.
So it allows, for example, a technician on a factory floor or a Marine on patrol to access and contribute to the enterprise-wide AI system in real time just using a mobile device.
It turns every operational device into a part of the AI network.
Shifting to the government and reindustrialization mission, Sankar provided some really concrete examples of strategic alignment that tie into the political framing we're going to discuss in a minute.
Yeah, the U.S. Army issued an official public memo directing all Army organizations to consolidate and centralize on Vantage.
Which is their Army data platform built on Foundry and AIP.
And management views this consolidation as incredibly significant. It's not just a technical upgrade. They're calling it a cultural decision across the entire Army.
To enable data-driven lethality and rapidly sunset legacy systems, this reflects a strategic alignment where Palantir's platform is becoming the single source of truth, the official operating system for a massive military entity.
And the company also highlighted its early investments in supporting U.S. industrial policy, specifically through initiatives like Warp Speed and the American Tech Fellowship.
Right. Sankar noted that these efforts are now bearing fruit, and they're being adopted across the traditional defense industrial base and the maritime industrial base, not just by, new tech startups.
Which speaks to the platform's ability to modernize these legacy-heavy industries and to do it quickly.
Sankar closed his section by highlighting the true face of innovation, the actual people they're empowering through the American Tech Fellowship.
This is so important because it reinforces the narrative that their software empowers the existing American workforce, linking tech success to national prosperity and meritocracy.
Yeah, he cited 3 specific fellows, and we should mention them because they really solidify this non-elite focus. There was Mason, a civil engineer in Louisiana, building AI apps for construction estimates.
Right. And Michael, who's working for a potato farm in North Dakota, streamlining their operations.
And Cody, a utilities expert in Georgia, ensuring safe energy delivery in the South.
Those examples are so crucial because they directly counter the perception that AI only benefits, white-collar tech workers in Silicon Valley.
Exactly. Palantir is framing its platform as accessible and valuable to blue-collar and vocationally trained workers, which connects back seamlessly to the CEO's later philosophical points about meritocracy and the American worker.
The technology is clearly advanced, but the value is highly accessible to the end user.
Which brings us to Alex Karp's prepared remarks. They are always highly opinionated, often contentious, and they serve as much as a philosophical statement as they do a financial report.
And this call was perhaps his most aggressive yet. He immediately raised the bar by taking an incredibly aggressive stance against critics and analysts.
Right. He started by declaring that Q3 results were not normal results, not even strong results, and not extraordinary results.
He then claimed they were, and I'm quoting, arguably the best results that any software company has ever delivered.
And he followed that up by stressing this was not hyperbolic, despite analysts who have been wrong at every price. I mean, that is an explicit challenge to the financial establishment.
It's pure defiance. Karp is using the exceptional financials, the 114 Rule of 40, the 100+% U.S. commercial growth, as irrefutable proof that their unique countercultural path actually works.
The numbers, in his view, they validate the entire corporate philosophy.
And he drew a direct, very bold line between their cultural values and their financial success.
He emphasized that the company stood by the American warfighter, Marine special operators, people in clandestine services, and was the first company to be completely anti-woke.
And he claims the results demonstrate that supporting the American worker and prioritizing that mission alignment leads directly to venture quality results. This framing just merges politics, culture, mission, and business strategy into one cohesive thesis.
It's a highly strategic piece of rhetoric. And while that clearly resonates with one segment of the market and the defense industrial base, it is important for you, the listener, to consider whether this strong ideological positioning risks alienating a significant portion of the global talent pool or, multinational clients who might not share those specific priorities.
But Karp, he positions it as a competitive strength.
Absolutely. He then moved into the unit economics of their business, explaining why their headcount is not growing in any way linearly proportional to that growth, and why their sales force, which is declining, still managed to achieve 77% U.S. growth.
Which leads to the core concept of their value proposition. They are downstream from the value creation.
Unpacking that phrase, downstream from the value creation, is critical to understanding their business model. Karp argued that they've created direct alignment with our customers.
They're not just selling a seat license, they're fundamentally transforming the customer's unit economics. And in return, the client pays Palantir a subset of the massive, often dominance level value they gain from using the software.
That's why their margins are so high and why their NDR is 134%. They become an indispensable utility that earns a slice of the transformation, rather than being just another replaceable sauce vendor selling commodity licenses.
Karp distinguished this sharply from competitors. He claimed Palantir succeeds by empowering the tribal understanding of their business with their engineers and their ontology, rather than selling commodity parasitic software.
They earn their high margins by solving the most painful, most integral problems.
He also used that geopolitical contrast to bolster his point, explicitly urging listeners to look at how poorly stagnant Europe is doing versus how well America is doing in adopting the technology.
Which reinforces the idea that their strategy aligns with the dynamism of the U.S. economy and American priorities, making their U.S. focus look like a deliberate winning geopolitical strategy.
And finally, he addressed the AI GDP question, this focus on meritocracy and the American worker.
Yeah, Karp asserted that Palantir's platform is focused on ensuring that a portion of the GDP growth that's bolstered by AI is available to working-class men and women, not just the elite.
He argued they prioritize meritocracy and spreading GDP to the working class by making their value creation higher. He pointed out that the people actually doing the coding and working on the factory floor are often vocationally trained smart Americans, not, conventional computer science graduates.
It's a very specific mission alignment that he believes is key to their success and attracting the right kind of talent and customers.
His overall message in this section was just a powerful challenge to the traditional financial establishment. Their unique, almost anti-establishment approach, combined with superior non-commodity tech, is what yields these bombastic numbers.
And that the numbers themselves validate their entire political and cultural philosophy.
Which sets a very, very high bar for the Q&A session that follows.
So now we move into the Q&A, where analysts and shareholders got the chance to really push management on these themes of complexity, speed, and differentiation.
And the very first question came from a shareholder, Anna Soro, asking about Palantir's unique differentiator that maybe others don't understand. Hashtag tag 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 4A. Shareholder question. General differentiators.
So to summarize, the shareholder question from Anna Soro was straightforward. What do you see as Palantir's unique differentiator that others may not get?
And Shyam Sankar took that one first. He noted that while the role of the FDE, the forward deployed engineer, is becoming fashionable and even mimetic among competitors, they don't truly understand it.
Sankar stressed that Palantir builds software that works in the real world as it exists, which is messy, complex, full of friction, not software that ought to work in a theoretical vacuum.
And he went on to say their measure of success, unlike a lot of enterprise software firms, is did we solve the problem, not did we sell the software.
And that radical focus on the outcome is what led them to build Ontology a decade ago, which he reiterated is the necessary prerequisite for getting safe, executable value from LLMs today.
Their success is a function of their obsession with solving the core, messy problem.
Alex Karp then followed up, saying their unique work forces them to go up the chain of complexity every day.
Right. They're not interested in the easy commoditized problems that can be solved with, generic cloud services. Instead, they are taking on the most painful, most integral, most valuable parts of the stack in every single enterprise.
And Karp argued that this proximity to the most complex, valuable problem is actually their safest position.
Why is that?
He claimed it's because that's where generic black box AI or competing LLM implementations just cannot possibly compete successfully.
He called the idea that a black box could solve these core, complex, high-stakes problems, and I quote, a joke to believe it could solve.
So they are earning their keep and justifying those high margins and that 114 rule of 40 by operating exclusively on the front lines of complexity.
So after that discussion on the core technological moat, the focus shifted pretty sharply to market velocity with a question from a major analyst, Dan Ives.
So Dan Ives, global head of technology research at Wedbush, he focused on the accelerated customer adoption velocity.
Specifically, he wanted to know about the anecdotal shift they're seeing, the move from an initial contact like one of their boot camps to actually launching these huge enterprise-changing deals.
He was basically asking for the qualitative evidence to support the quantitative acceleration we've been talking about.
Ryan Taylor jumped in with the numbers first, reiterating that U.S. commercial TCV of $1.3 billion, that's striking 6x growth on a dollar-weighted basis.
Yeah, including 83 deals over $1 million. And he confirmed that anecdotal shift. He said, customers are no longer coming in saying, let us do a use case, which was the approach for years.
Now, the demand is C-suite driven, and they're asking, how do we reorganize our entire organization around Palantir and AIP? The focus has shifted from validation to transformation.
And Alex Karp elaborated on the profound, almost disruptive nature of this transformation. He noted that newer clients have much higher expectations. They want to transform their entire business in a matter of months.
While remaining public company.
While remaining public. And this is where we need to reflect on what was probably Karp's boldest claim of the whole session.
Which was?
He used the analogy that Palantir is now providing a private equity-like transformation in the public markets under the current leadership.
Something that historically was only achievable by taking a company private and implementing radical secretive change away from public scrutiny.
That is a staggering claim. I mean, a private equity transformation usually involves massive cost-cutting, structural overhauls, layoffs, all done behind closed doors.
So for Palantir to claim they can deliver that level of deep, immediate structural change in months using software, while the client is under the full real-time scrutiny of the public market, it's just audacious.
It truly suggests the speed and depth of the value creation must be completely unprecedented.
It fundamentally changes the relationship. As Karp put it, they've moved from begging and pleading to be at the margin of a problem to now being the problem and reshaping them.
The customers are demanding that Palantir lead the fundamental restructuring of their business. That's a massive vote of confidence in the platform's ability to drive change at speed.
So the final segment of the Q&A featured Mariana Mora from Bank of America, and her question was multifaceted, which was great because it allowed management to tie together the commercial velocity, the internal tech, and the government segment success, which was also extremely strong this quarter.
Right. So to summarize, Mariana Mora, Director of Equity Research in Aerospace and Defense, had a complex three-part question. First, on commercial. What changed behaviorally for customers to accelerate their appetite?
Second, how is internal tech like AIFDE helping Palantir keep up with this accelerating demand?
And third, regarding the strong U.S. government growth, which was up over 50%, how do they think about future opportunities like the Golden Dawn initiative going forward?
Okay, so on that first part, the external behavioral change, Ryan Taylor answered first. He cited a simple but really powerful network effect.
He said customers are now sharing their tangible results, which is leading to deeper engagement and more proactive demand pull interest from their peers. Seeing is believing.
And then Karp supplied what he called the vulgar version,
Which, as usual, was the more provocative answer.
He said flatly, our clients realize that competitive choices suck, basically.
He elaborated that customers who tried long, traditional, multi-year migration projects, or, as he put it, knock-off half-fake things, now see their peers using Foundry, Ontology, and FDEs and achieving transformative unit economics almost overnight.
So the frustration with those legacy solutions, where companies spent hundreds of millions of dollars and ended up with nothing transformative, that's driving customers back to Palantir with a whole new attitude.
Right, and Karp said this realization empowers Palantir to shift the terms of engagement. They can now tell clients, if you want it to work, you're going to have to do these 5 things, including meeting with them and letting their engineers come in and work on the valuable problems.
He used a powerful and honestly slightly disturbing metaphor. He said clients are now interested in getting the pathogens out of their business.
Meaning that ecosystem of wasted time and money generated by ineffective legacy vendors and bloated systems, they're seeking a cure, not just a software update.
So then on the internal tech and culture part of the question,
On the internal front, Karp stressed that the most important focus for them, even with all this financial success, is to double down on maintaining the company's unique attributes.
he emphasized staying close to the customer problem and ensuring Palantir remains, in his words, tribal and cultist and unique as it was 20 years ago. He believes this intense cultural focus leads directly to better numbers.
Right, like that 77% U.S. growth with fewer salespeople.
He detailed their mission alignment as a cultural cornerstone, powering ICE, defending America in Ukraine, being on the front line against adversaries including China, and supporting Israel.
This mission focus, in his view, attracts and retains a highly effective workforce that doesn't need to be micromanaged.
And then Shyam Sankar gave the technical answer about AIFD's role in scaling. He confirmed AIFD was built primarily for internal use.
And the numbers prove its effectiveness. Headcount grew only 10% in the quarter, but revenue grew 63%. That is the essence of that 114 Rule of 40 score.
AIFD has made their existing FDEs wildly more productive, allowing massive scaling without linear growth in personnel.
Sankar also noted that benefit is being passed on to government customers, specifically citing the Army's on Vantage consolidation. The goal is to make a generation of green suitors, or Army developers, proficient and superheroes on day one using AIFDE.
Which is obviously essential for rapid digital transformation within the military.
And that third part of Moore's question asked specifically about opportunities like Golden Dawn. This is important context for the U.S. government growth.
Right, and while management didn't detail Golden Dawn specifically, we can infer that the strong U.S. government growth, up over 50%, positions them perfectly for those kinds of initiatives.
Golden Dawn is widely understood to refer to major modernization, information sharing, and data centralization efforts across key U.S. defense and intelligence agencies.
And the Army's advantage consolidation is a direct proof point of Palantir's ability to win and execute on these massive enterprise-wide defense mandates, which are exactly what Golden Dawn-type opportunities represent.
Exactly. The strong TCV and that explicit Army mandate, they confirm their dominant position in the defense data infrastructure space.
Now, before he finished his part of the Q&A, Alex Karp made a remarkable and totally unprompted political statement that we have to report to give you the full flavor of the transcript.
Right. We're reporting this verbatim from the call to ensure accuracy and impartiality, but it's important for you to know that this highly specific and controversial political framing is a core part of the CEO's self-described mission.
He contrasted the national response to fentanyl deaths among working-class people, 60,000 deaths a year, versus what the response would be if it were 60,000 Yale grads.
He explicitly asserted that having an open border causes the average poor American to earn less, and he criticized fellow progressives for, in his view, repping elite people instead of the working class.
He then expressed pride in the company's efforts to stop the 60,000 fentanyl deaths a year, linking this social issue directly to the company's technical work supporting law enforcement and border agencies.
This strong political commentary just reinforces that consistent thread throughout the entire call, that Palantir views its business success not just as financial, but as cultural and geopolitical validation of its unique mission.
Which it defines as supporting meritocracy and the working American against both foreign adversaries and domestic elite detachment.
His final, somewhat defiant closing remark to individual investors was to get some popcorn and watch how unhappy those who didn't invest are.
Emphasizing that those who stayed with them are supporting the right side of what should work in this country. Meritocracy, lethal technology vis-a-vis adversaries, products that spread GDP to working-class men and women.
The call concluded with an unmistakable message. To them, success is a function of their ideology. So what does this all mean? If we try to synthesize the core thesis of this monumental quarter, this deep dive really reveals 3 major intertwined themes.
Themes that drove the results and will almost certainly define the company's trajectory going forward.
Right. Theme number 1 is the unprecedented financial performance and efficiency. That Rule of 40 score of 114 is the ultimate proof point.
This wasn't just a high-growth quarter. It was a high-growth, high-margin quarter, driven by a massive acceleration in the U.S. enterprise segment.
They're setting a new, extremely high benchmark for enterprise software profitability at scale.
Okay, theme number two.
Theme number two is AI differentiation. The non-commodity stack is real.
Right. The fact that their platform is driving C-suite mandated full-scale reorganizations in just months, which is validated by that 134% net dollar retention rate, it proves that AIP, ontology, their FDEs, all these tools, they're not commodity solutions.
They're solving problems, like that 5-day data warehouse migration that generic black box AI just cannot touch. The sheer velocity is a result of a radical technological advantage.
And theme number three, the strategic and geopolitical focus on the U.S. mission.
Yeah, that immense growth in the U.S. commercial sector, 121% year over year, and their strategic entrenchment in the U.S. government. It's a direct result of their strategic alignment.
They explicitly position this U.S. dynamism as a rejection of what they called the stagnant Europe model, creating a very clear geographic, cultural, and ideological market position.
The speed of adoption is maybe the single most transformative takeaway here. Customers are moving from skepticism to demanding a private equity-like transformation of their entire business in months.
Which tells us that the value created by AIP must be immediate, obvious, and fundamentally transformative to a client's unit economics. It has to be to justify those massive TCV commitments.
And the implications for the broader AI market are profound. The numbers, especially that 114 rule of 40, they prove that there's a massive part of the AI market that actually cares about deep surgical value creation, not just basic LLM integration.
This is the complex, highly specific, high-stakes segment that Palantir claims to own because it requires their comprehensive, context-aware approach built on ontology.
So we want to end with a final provocative thought for you, the listener.
The unique link that Alex Karp constantly drew was between their political and cultural stance, being anti-woke, supporting the warfighter, supporting the working-class American, and their financial success. He believes their unique culture is their primary competitive advantage.
So the question for you to mull over as you process all this data is this. Does this commitment to meritocracy and making GDP available to the American worker represent a sustainable structural competitive advantage in the enterprise AI space?
Does it ensure they attract the right clients and talent and maintain that high margin differentiation?
Or is it simply powerful CEO rhetoric layered on top of what is fundamentally already excellent product delivery that allows them to command that premium?
It's a fascinating intersection of ideology and market capitalization.
It's a profound question about the role of ideology in corporate success in the modern world, especially in a sector as geopolitically critical as artificial intelligence.
We really hope this deep dive gave you some thorough, high-value insights into Palantir's Q3. Thank you, as always, for joining us for the conversation.
We really appreciate you tuning in and relying on us to cut through the noise.
And don't forget to click like, share the video, subscribe, and stay tuned for upcoming content. We will catch you on the next deep dive.